as you get further away, as we get further away from in government from the ground level, we still count on you to know what's going on locally, know the needs of your townships. So you are appreciated. We know that the work that you do goes unappreciated, and many times those that we know our townships don't always appreciate us like we think they should, or you put in so much work and you get a lot of complaints, but know that you're supported here. I may be state government, so while I am with Trust Indiana, I am a state employee and I do work for the state treasurer. But you are appreciated, so keep doing what you're doing. And our job here at the state treasurer's office is to help you be able to use the money that you do get. We know how little it is. We know how you have to spread it out to make it work. And there's never enough. There's not a money tree that many believe that exists. So you take what you have and you use it to the best of your ability. But one of the things that you are able to do to expand your money is to invest. And I'm sure as you ran for township trustee or being part of that township committee within your township, working hard, that you didn't really think, great, I get to be an investor when I become, you run to do better for your community. And one of those things that falls into your lap is the opportunity and the need to invest those funds that you are not using currently. So we at the treasurer's office, that is pretty much the job of the state treasurer, where other states, the treasurer has many, many roles. And there are many roles of the state treasurer, but the main purpose, he is a chief investment officer. We specialize in investments and knowing safe investments. And we also somewhat oversee banks, and we don't make sure that there are other state agencies that make sure that banks are on the up and up. But we at the treasurer's office also run a list of approved depositories, which you're required to make sure that the banks that you are using are on that list. And we try and keep them clean, or keep the list clean as to those that can support your public funds and return them should they have issues. So I'll explain a little bit about the public depository list here in this in this. Let's first talk about Trust Indiana. So investments are overwhelming. None of us, I'm sure that there are several nerds out there like me who love the investment portion of it, but I would think that for the majority of us, investments are just scary, especially when you are dealing with money that belongs to the constituents, money that you're responsible for, but you're not only responsible for making good decisions about that. If something goes wrong, you're the one that has to answer for it. So a lot of us like to shrink in and say, okay, I'm going to protect this money, but we also want to use it to the best of our ability. So under the Treasurer of State is the fund called Trust Indiana. This is a local government investment pool. Almost every state has a local government investment pool, which is a pool of money that you can invest into that is totally acceptable by the State Board of Accounts, because we know they're the ones that are going to be looking at what you're investing in. And it's easy, it's free. And to me, it's not scary. To you, it should not be scary because it is overseen by the state treasurer's office. But let me tell you a little bit about what this is. I'm going to go ahead and share my screen. If you all can you all, let's see, let's share this. Can you all see this? Let's see if I can get it into my slideshow. There we go. Okay, can everybody see this? Drew, can you see it? Yeah, okay. Kathy said yes. Okay. So Trust Indiana, investing for Indiana local units of government. And as I said, most states have them. Indiana, we're on the cutting edge of everything, right? We like to be up front saying, hey, look what we did. Let's see if it works. Actually not. We were the 45th state to actually get one of these. It just shows that we are careful. We're very careful with the money that's given to us. We want to make sure that it is protected. And so we kind of watch what other people do. And I'm sure you as a township, you do. You watch your neighboring townships and let's see what they do. And if it works, I'm willing to maybe stick my toe in the water and try it as well. And that's understandable. We're Midwest. We're Indiana. We don't like to we don't want to trust anybody that is not trustworthy. And so we look to our neighbors. We look to those that we've formed relationships with that we trust. And while Trust Indiana is out of Indianapolis area, Marion County, it is for the entire state. It is for your use. Wait a second. Let's get the disclosure. We always have to have a disclosure, right? Okay, so the purpose is to give you a convenient opportunity to invest those public funds and in a safe way. But it was created by the state legislature back in 2007. These are all details which are like, la, la, la. But there's part of it about knowing that the state legislature was heavily involved in the creation of this, that there should be some easing of your mind. So it is not just one agency that's like, hey, let's do this. No, it was a group effort. It was an effort all across Indiana because we had other township trustees, we had county treasurers, we had clerk treasurers, all on a board to try and create this. And we got it passed in 2007 and we opened in 2008. Always with public funds, our focus is on the safety of the public funds. We do secondary liquidity. You don't want to tie up your funds if you're going to need them to make payroll or for township assistance or for any of the other things that you are required to pay. That's the worst feeling, to have tied it up in some longer term investment and then all of a sudden have the realization at 3 a.m. in the morning that, oh, shoot, I need that money tomorrow. This is why we encourage you to figure out your cash flow throughout the year. You get 2 distributions from property taxes when property taxes are paid that's coming up here in November, isn't it? In May and November. So about 6 weeks after that, you get your distribution. And so you have to make that money that you get at that distribution last for 6 months. So while you have, this is a good idea to think through, is you have some of that money that's not going to be used for 5 months. Some of that you're going to need this month, next month. So figuring out what your cash flow is key for investing. I don't mean to add to your list of many things that you already have to do, but knowing your cash flow is going to be important when you invest. So yield is third. We never chase yield. I hate to tell horror stories with this, but sometimes it's the horror stories or the bad things that happen that help us learn and do better. There was a state who did chase yield. They had a local government investment pool, and they were paid commission. Those that invested it paid commission in order to invest these monies. And when they got paid commission, they were chasing the best yield. How much can I get out of this? Well, unfortunately, this particular investment pool invested in 2008 and prior to 2008 into the housing market of the housing market bust. And unfortunately, this particular one fails. We learn from mistakes. This one does not work on commission. Any extra money that we get that does not run the fund goes back into your pocket. So we're not trying to make profit for ourselves. We're not trying to make profit for Trust Indiana or the state treasurer. We are government, here to help government. And so you know that. I always like to be 100% open. So we learn from those that make mistakes in order not to make those mistakes ourselves. So we are not run on commission. So not going to fail. I've not lost $1 to kind of ease your mind a little bit. That was not to scare you. Sometimes I like to hear the bad stories. So it's like, whew, okay, we won't do that. So you can see here, it is overseen by the state treasurer's office. Daniel Elliott, who is our current state treasurer, is over it. He does not do much in it. And yet the 2 pictures that you see under there, Mike Frick and Dwayne Jeshaway, Mike Frick is the portfolio manager for the entire state of Indiana. He takes all the state money and invests all the state money. Dwayne helps him as well, but Mike is the one that oversees actually the investments that we use an asset management company as well, but he looks at those and oversees to make sure those funds are being invested properly. Participant breakdown. In the beginning, I talked about, which wasn't actually that long ago, so hopefully we can still all remember. I can't remember why I walked into a room, so I don't know how I would remember 10 minutes ago. But you can see here, your neighbors are using it right now. We have 52 townships, and actually that number is much higher now. When you go to a conference, I love going to these conferences that that you all put so much work into. Drew, you and Debbie, you and Drew work so hard at these conferences for us to be able to come and share some of this information. It is a pleasure to come. It is a pleasure to help support you. And I loved getting to see many of you face to face. This is where I work best. This is where your trust is actually developed. Yes, these are great. COVID caused us to have to go to the computer, and this is a good way to reach all of you. But I like to, if you're going to put your money, if you're going to trust me, trust my word, a lot of times that takes a face-to-face meeting. And so at these conferences, I get to talk to you. I get to hear your stories and see if I can help. I am never going to push you into something like this. We offer this as a tool for you to use amongst other things, because our sole purpose is to help you and invest public funds, and to help you invest those public funds safely. And so I'd never push anybody into this. You have to feel comfortable with what you're investing in, but I'm here to offer this, or to talk you through what Indiana code allows you to invest in and what you should not be investing in. State Board of Accounts will tell you that too. So have no doubt that when you do your audit, they will let you know if you're doing something wrong. We do try and avoid that, because no one likes to have their wrist slapped. And State Board of Accounts, we know, can at times be a little brutal. And they are there to help us, but you know, they can be a little scary. But anyway, as you can see, this is a breakdown of number of accounts. So we are at about, I'd say about 670 accounts now. This has been the growth since 2007. It's a slow growth, and that is okay. I would not want an explosion of growth, because then that makes it easier for us to handle. But as you can see, 52 townships as a whole is not huge when you think of all the number of townships that are there. Many of you are part-time. You have other jobs, and so sometimes to get to township offices is a little difficult. You have very limited hours. Some of you work out of your home. You don't even have an office. And so you see that smaller number is pretty much from word of mouth. I am happy to come to your office. I'm happy to come to your home and talk to you one-on-one. But I also know you have a life as well. So if you want to know why that number for townships is so low, that's why it's going to be word of mouth. But you can see the many others that are also involved. And it is growing, especially with the rate the way it is right now, which I'll talk about in a second. But it is nice to see how many others are invested in as well. We want to know what our neighbors are doing, and if they're doing okay. Well, if I like my neighbor, I'm a little more willing to try. This is a lot of information, which may be a little confusing. The portfolio type, prime style. It's the highest, the safest, a AAA. Short-term liquidity. The purpose of this is not to invest long-term. The purpose of this is to be able to put it into an account and pull it out when you need it. So this is, for lack of better words, this is a savings account on steroids. You get a higher return, but you're able to pull that money whenever you need it. But that also means that the rate does not stay the same for a period of time. Where you have a CD, you have put that in for 6 months, you can guarantee that CD rate is going to stay the same, and you know how much you're going to get from it. So you put 50,000 into a 6-month CD, you know, at the end of 6 months, you're going to get that 50,000 back with the amount of the interest rate that you were told at the beginning. The reason that this could change the rate on a daily basis is because it is liquid. So it's very short term. Doesn't mean you have to leave it in short term. You can leave it in as long as you want. The other benefit of this is that you're accruing interest on a daily basis as well. So as we learned, I think in elementary school, is it better to accrue or to accrue daily or to accrue monthly? And so tomorrow you're going to be earning interest on today's principal and today's interest, and then so on and so forth. So throughout the month, you're earning more and more interest on the interest that you would earn before. Unlimited withdrawals, unlimited accounts. You create an account under your township, and you have many township funds, funds that you break up. like this amount of money can be used for this amount for this particular purpose. So the nice thing about it, you have your township account, and then you can break up the funds underneath your one account. Dividends, like I said before, they're paid day to day. Weight average maturity, not that that means anything except that it is extremely liquid. And then net asset value, put $1 in, you're going to get $1 out with interest. Never lost $1. Very confusing, huh? If you guys want a copy of this, can't sleep, need something to read that's going to put me to sleep, I'm happy to send it to you. So what are we invested in? The one benefit of Trust Indiana is that we are allowed to invest beyond what you're allowed to invest in. Most of the things that you see on the left-hand side of the screen, all the dark blue and the two bottom of the kind of the turquoisey colors, you are allowed to invest in if you have the time to go out and research. I don't know if anybody has ever invested in U.S. Treasuries. I actually did it for the first time myself because I thought, hey, if I'm telling people that they can invest in treasuries, I should probably know the process. Now, Mike Frick, who you saw the picture before, our portfolio manager, always invests in treasuries, so he knows how to do it. But it's helpful for me to also know. And it is a little bit of a process. It can be great rate of return, and you're going to have set amounts like a certificate of deposit. You invest in the U.S. government for set amounts of time, and they are going to give you interest back with your money when that matures. So it's very similar to CDs. You can also do that on treasurydirect.gov. And so in that, 6 months ago, I went ahead and took $200, and I'm like, let's see what happens. It matures today. So I have not gone in yet to pull it to see how easy it is to pull. If you ever want help walking through that and are interested in treasuries, let me know. I can walk you through that. But you can see on the left-hand side, Indiana bank deposits, 50% has to be an Indiana bank deposit. So when this was established in the legislature back in 2007, one of the agreements that we came to with the state legislature and the Bankers Association, because we love our banks are very important to us, and we know how important locality is. So one of the things that we did in that was that said we would put 50% of the funds of the portfolio in Indiana banks. That doesn't mean they have to be chartered here. It doesn't mean that they have to only be in Indiana. They just have to have bricks and mortar or a building in the state of Indiana and be on the approved depository list. Like I told you about the approved banks for public funds. And that's the only rules that we have with the bank deposits. But 50% of that is here in Indiana banks. We also invest in money market funds. Many of those are done through banks as well. Repurchase agreements, those are overnight agreements. Those are also things that you can invest in on your own. A bank can help you with those. So I talked about U.S. Treasuries a little bit. You can do that. U.S. agencies, that's going to be Fannie Mae and Freddie Mac. Those are more those agencies that help with specific parts of the U.S. government. The one thing that you are not allowed to invest in by yourself without oversight from something like this is commercial paper. This is many times offers a higher yield than what you're going to get at your bank. And let me explain what commercial paper is so that we're not confused, because even me at one time was very confused. I live and breathe this at this point. But it is not the stock market. We are not out there putting all of our money on black at the roulette table for you. Not at all, because the safety is the most important. But what commercial paper is, you'll have businesses, very established and stable businesses that will need short-term loans. And instead of going to the bank and filling out all the paperwork, and many of you have gone through the buying a fire truck or what have you, and there is a lot of paperwork. There's a lot of steps that have to be taken. So what a company can do instead of going directly to that bank is they can go out and say, hey, I need $100,000 just for 30 days. And so we'll buy that 100,000, we'll give them the 130,000 and they return it within 30 days with interest. Of course, there is paperwork. We always have to have that, the contract to make sure that they are going to pay it back. But there is a whole list of commercial paper. There are thousands upon thousands upon thousands of pieces of commercial paper that you can buy. They are rated. Standard & Poor's and Moody's are two federal companies that rate businesses and their financial status. And they can be rated. And if any of you have ever done bond issuance or similar, you'll understand the rating depends, is a huge factor in how much interest you're going to pay. So the higher the interest, most likely it's not quite as safe. So with this, we only do AAA rated businesses, which means they are stable. We always see what their financial reports are to make sure that, yes, are they going to be able to pay this back? But we take those AAA rated, which are the highest rated companies and that are able to pay that back. And then we shrink that down even more to the top 10%. So we're not messing around. 100% or AAA rated is not enough. We even shrink that down more, that we want to make sure that these people are going to legitimately pay back this information. Or pay back this money. The research that goes into these is extensive, and I made the mistake of maybe calling my credit team a little bit nerdy, and they are. You have to be able to love looking at a computer and research all the time, and I put myself in that group. I can only do so much research before I want to tear my hair out. But they are one of the best teams that, no bias, but they are one of the best teams when it comes to credit research and making sure these companies are going to follow through. All of this to say, I feel like that was a lot of Charlie Brown's teacher, the what. But just so you know that we do not invest in things that are not credible. Right now, you can see on the right-hand side, assets that we have in the fund. The fund is right now hovering close to $3.5 billion. We can see the growth. This is just a copy of, or a chart of the growth over the years. You can see this is the balance of it. So back in when I took over in 2000, and this is not to pat myself on the back. This is the growth of something like this. When it's new, not a lot of people are going to be interested, but as the years go on and it shows to be stable, more people are going to invest in it. But when I took over in 2014, we were at 400 million. Today we are over 300 or 3 billion. And it's lasted. Not that that's a surprise. I knew it was going to survive. But it's always still good to see something like this. More information. Now, right now we're in a weird time in our government. Not only do we have a presidential election year, which tends to skew the market a little bit, we have also, having gone through COVID, dropping rates to zero for so long, then all of a sudden trying to get the economy under control with inflation, the rates skyrocketed. And this fund is going to show kind of what the feds are doing. If the feds are going to raise rates, we're going to take that. We're going to give it right back to you. This rate is going to go up. We want to turn any extra that we get over to you. We're not keeping any of it for ourselves. As you can see here, July 2023, we were at 5.1. So we were still raising rates at this point. At June, it was 5.33%. Now, the feds just dropped rates last month. And it did drop it about 0.5%, or 50 basis points. That's going to directly show on the TrustIndiana rate. Remember, I said it is liquid. And so when the feds drop rates, everything else is kind of going to drop as well. And you're going to see a little bit of a drop. So today we are at 4.96%. So while it didn't drop the whole 0.5%, it did drop a little bit. So you can tell when it's going to drop. If you hear the inklings that the feds are potentially going to drop rates, we're not going to drop rates until they actually drop rates. We're not going to drop rates when they start talking, oh, let's drop it another 0.25%. No, we're going to keep it where it is until we actually feel and start not getting as much return for the money that we're putting out there. It all goes back to you. The benefits of it, liquidity, we'll go dividends accrued on a daily basis. I told you about that. This is a free account. There are no fees to move money. There are no fees for your account. There's no minimums, no maximums. Well, maximum, yeah, if you don't have the money in there, I guess that's a max. You have several safety factors in here. You can have dual authorizations. I know many of you are one member office and you have to do everything. You don't have a secondary person. Sometimes the board wants to see what's going on. Sometimes you have a board that wants to be more involved. So you are able to do something where if you wanted to move money, you can put that order in there. Then you have one of your board members or another staff member go in there and say, okay, I see it, boom. I authorize and it sends. So if you need that dual authorization, we have that. Told you about our credit research team. They scare me. They're that smart. Same day liquidity, competitive daily yields, and unlimited transactions. We're not going to limit you on how many times you move money in and out. You can actually, if you get direct payments from the state can put it in there, and it is a professionally managed portfolio. I should have said this in the beginning. If you have questions along the way, not that I see there's chat and I see that there's a couple in there, but I'm not following it quite as well. So Drew, if you see any that need to be answered, let me know and I'm happy to answer those. I can go back on slides too. You get a monthly statement at the beginning of the following month and it looks exactly like a bank statement would. And so let's see, ease of use. Everyone that is a contact on your account will get a user login and password. The process of moving money. When you open your TrustIndiana account, you open it under the Township. And in that initial application or registration, because it's not an application, you will be approved for one. You put your banking information in there. You add the contacts that you want to have access to this TrustIndiana account, and then send it to us. We set it up so everything is a drop-down menu. There is going to be nothing that is left, with exception of typing in the amount. You're not going to be able to send this money to the wrong bank. When you're ready to invest, you go into the TrustIndiana portal. You say, I want to pull $10,000 over to TrustIndiana. Boom, 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 done. We'll go in, we'll pull it and put it into your account. When you're ready and need to spend that money, you're going to have to move it back to your transaction account because you cannot write checks. You can't send wires or ACHs to anything other than your transaction account, the one that was set up from the beginning. So when you're ready to make payments, again, you have to send it back to your bank and make payments from there. The sole purpose of this is to put money and let money sit in here and earn interest. This saves for fraud. One of our big issues right now is that people inside our own country as well, we've seen that happen, but a lot of countries outside of the United States want to somehow infiltrate into the United States, and any level of government is a success for them. So we need to make sure that we are set up so that fraud can't take place, that we have those measures in place, because I'll tell you, they rejoice when they get any sort of U.S. government, whether it's down to the level of trustee or the townships, all the way up to federal government. So any sort of infiltration that they can do is a huge success for them. We have to make sure they don't get in. And so we have many things online to protect from that, and want to make sure that your public funds are safe. Any questions thus far? Do I need to look at the chat? Drew?
Just a couple. We typically wait, but somebody said, "How can I get?" Yeah, you want to wait, and then that way we can go back to
I'm
them?
almost done with this, and then
Okay.
I have a few more things I can talk about other than TrustIndiana, some options. But
Okay.
yeah, I think this is almost done anyway. There's information here on setting up an account. I am a phone call away. My number is not on here. It should be on my information page at the end. Where is that? Dun, dun, dun. Okay, I'll get there, I guess. So we have a client services team on hand. They're the ones that will actually move the money for you. I don't move money, and be glad that I don't move money. I don't want to lay awake at night wondering if I did everything right. But here's information for our team that helps us. They're our asset management company. There is a registration that is available. You can actually go to the Trust Indiana website, which is trustindiana.in.gov, and pull that account registration. I can mail it to you. I can email it to you. I can deliver it directly to your desk. I am happy to do any of the above. So that would be the first step in opening one. And you would send it to me, and then I get it to client services, and we get you set up. You get emails saying, here's your information to log in, and boom, you're ready to start. You're ready to start investing right away. All of that takes, I think, time-wise, as long as we can get in touch with your bank and make sure all the banking information is correct, because we're only going to add a bank that is under the name of your township. We will not add a bank that is under the name of an individual, another safety protocol. But once we get that set up, it usually takes around 24 to 48 hours that you're ready to go ahead and start investing. You can see here, 2023, we were able to return $146 million back in interest back to Indiana government municipalities and counties and townships and such. So that is a great number to be able to give back. It's not really giving back, it's you investing and making extra money. So that's the amount that actually went back to government entities within the state of Indiana. Okay, there's my information. This is my cell phone number. You can call that cell phone number at any time. If I don't answer, I try and answer all the time. It's because I accidentally turned my volume. Well, I didn't accidentally turn my volume on down, but I accidentally forgot to turn it back up. But leave a message and I will give you a call back. And my office, that's the state treasurer's office. There's my email address. I also have a direct state address if you prefer a state email address. But that's what I have for Trust Indiana, and I can go beyond, and I have more for just investments in general if we want to talk about that. But Drew, let's go ahead and do questions.
Okay, so I'll just go from the top and try to go down. Some of them might have been answered, but we'll just be fair. Like I said, if you had issues, our chat was kind of messed up in the beginning, but I think it's fixed. Somebody from Waltz Township asked, how would I get more information so I could share it with my board?
Oh, absolutely. I'm happy. Please email me. This one's a little, I wish I could put my other email address on there. So my state email address is no dot. There are too many dots here. cbarger@TOS, as in Treasurer of State. So cbarger@tos.in.gov. You can also use this. I get this email as well. It's just easier when I can get it on my phone. I can't get this email on my phone. Email me and ask. I will send you all sorts of things that you can print off and give to your board. I have also come to board meetings and I can sit there and answer questions. I can give a little mini presentation of this. I can just be there for you while you present to your board. So that's one of the other things that I do. I don't care when your board meeting is. It could be 7 p.m. at night and all the way up in Lake County. I will, since I travel from central Indiana, but I will be there. May take me a minute to get there, but I will get there for you. But I have other information.
So this is Adrian from FSSA.
Hi, Adrian. This is Debbie Driscoll.
Debbie, you're not on mute.
Yes.
I muted her.
Way to go, Drew. I think that answers, but just get in touch with me and I will send you anything to print off.
All right. The next question just asked if we could get a copy of this presentation, and I told him that I would try to see if I could get it. Typically, when we do these, we put up the video. That way, anybody that's not able to make it can watch it. That way, it's there for all our members. But I'm sure okay. Cindy would be more than glad to share, have a copy of this for us to put on there as well.
Yes.
The next question, does Trust Indiana advise on investment amounts, or is that at the discretion of the trustee and the board?
That is the discretion of the trustee. One of the benefits of this is because it's so liquid, if you put more in than you meant to, meaning you realize you have bills that need to be paid, and it's in here. There's no penalties, no price you have to pay in order to move it back over to your transaction account. Just leave 24 hours for it to move, but no, yeah. Look at your cash flow. I'm not allowed to advise because I am not an advisor, but many have put in and taken out on a monthly basis. So they'll put their property tax distribution into an investment, and as they need it, the monthly amount. This is why it's important that you figure out how you cash flow. You can pull it. But even if you don't know how you cash flow and realize, oops, next week I'm going to have to make this payment, you can pull the money out. Up to your discretion.
I guess to piggyback on what you just said, so if somebody does take their property tax settlements, is there like forms you have to fill out that have your county treasurer send those directly to you guys, or?
You can do it either way. So do it the way you normally do. I believe that this county treasurer will send an ACH or a wire to your bank. You can ask your county treasurer to send it to your TrustIndiana account, and that's actually free for them. So it's somewhat of a benefit to do that. Let me know. I need to work with the county treasurer on that because we've tried to get county treasurers to look into that, but they will put it where you need it to go. The other option when they do send it to you is you can immediately take that and you can do a transaction within TrustIndiana to move it over. But I do have I have one town that I'm working with that we're going to get the county treasurer to send it through TrustIndiana. One less step for you.
I think that was I got a bunch of questions, so I could ask for everybody
Okay.
else. And
Feel
so
free.
I did see on the disclaimer that there's no guarantee of future profits, and some may result in a loss. Is there minimal, like when you have a CD, I'm sure there's still some risk of a loss, but typically you don't, it's very marginalized or
Right.
minimalized. Is there, I know you guys can't say there's no risk, but is it pretty, like, would we ever see a loss if I put in $10,000? Would there be a chance that I didn't get 10,000 back?
There's always a chance, and there's a chance anytime you invest money. You can see the list here. I pulled this back up. What does the portfolio consist of? If you're in Indiana banks, money markets, repurchase agreements, those are all through banks. The FDIC insures you $250,000. The state of Indiana has its own FDIC, which is called, we love acronyms, right? Everybody, government, we thrive on them. It's called the PDIF, the Public Depository Insurance Fund. And when it is in a bank under the approved depository list, and I'll tell you where to look to make sure that your banks are on that approved depository list. There is an additional 300 million, actually, I think it's 350 million. Should there be a bank failure, there is that amount of money in order to compensate. Now, it's going to take a little while there's a process to go through. Anytime there's a bank failure, there's a process to go through, and that money will then be returned. And so all the ones in the dark blue, those would be covered by first, under this, it's not, FDIC is not a part of this, but the PDIF is. And so there is that insurance. Now your US agencies and US treasuries are backed by, I don't even know if this is, okay, the full faith and credit of the federal government, US agencies and US treasuries. So we'll leave that where that is. I know that different situations, the federal government will change their processes. There was a bank failure in California earlier this year, and the FDIC decided to make everybody whole. Normally, it would be $250,000. This particular situation, they made sure everybody was made whole. So there sometimes are changes. We trust that the federal government is large enough to be able to cover those U.S. agencies and U.S. treasuries. Most definitely what this is talking about is the commercial paper. And the reason I went over commercial paper so much is because there isn't actually a dollar amount behind commercial paper should there be a commercial paper failure. So if a company does not pay that back, what happens? Is there a loss? There's always the potential for loss. Anytime you put money out there, even if you were to put it under your mattress, there's a potential of loss by someone that comes and robs you. Commercial paper, they are broken up in certain amounts. So there's a maximum amount that we will put in any particular piece of paper. And so because there are so many pieces of commercial paper that we buy, the chances of all of them failing is very minimal. And then if one does fail, at this point, there is enough interest earnings that it would cover any principal loss. This is why I went over it so in depth and talked about our credit team and our investment team and this is why we only do AAA rated. And even when we do AAA rated, it's very that list is shortened quite a bit in order to minimize or mitigate any sort of risk. So always risk. That is definitely our goal to never have that. But we always have to be aware that there's the potential for loss. Haven't lost a dollar yet, though.
Thank you. The next question is, are we able to invest from the rainy day fund?
Yes. In fact, I would say the majority of people that invest will put their rainy day fund in there. It's one that they can sit and watch. And then, many times it's a test. You can open up a free account. There's not going to be any cost to you to open an account. If you're a little nervous about it, don't put a lot of money in. Put $100 in and then sit and watch it. Get comfortable with it. You have to be comfortable with it in order to build that trust in it. But rainy day is probably the highest used fund that gets put in there.
Thank you. Next question was, can we have you join our board meeting virtually?
I am happy to. Absolutely.
And do you want them to contact you through the email? We have posted your state of Indiana
Perfect.
email address.
Yes, do that,
okay.
And I will get it on my calendar. I can actually I normally use Teams, which can be used. I'm happy to use whatever format you use as well, but we'll get that on the calendar, and I will be present.
I think that's all the questions we have.
Okay.
I think. And obviously, I'm just going from my own personal township is that, and then what she kind of harped back to is that make sure you know your cash balances. Don't put yourself in a position. The rainy day fund would be the ideal for my own because we're not using it regularly. Whereas if you take it out of the general fund or your township assistance fund, any of the funds you can invest in, but they have to go directly back to those funds. So I know a lot of us townships don't have financial advisors, so investments are always tricky. And to me, this is one of the safer ones. You can do CDs with a bank that you bank with, but you're going to have your money locked in for whatever the terms of that CD is. So this is, I think, one of the better avenues to have that liquidity to move back if you have an emergency.
Right. I would 100% agree with you. I went ahead and pulled up the PDIF slide. Here's the website. This is something that you're going to be required to do, and sometimes you don't know. Go to here, look on this list, and make sure your bank is on it. Because if you have any funds in a bank that is not on this list, you are out of compliance. The State Board of Accounts will find out eventually, and we will get our wrists slapped, and we don't like that. But they will make you pull it and find a bank that is on the list. If you find that your bank is not on the list, we can get your bank on the list I know sometimes if you are in a border county and that township touches another state, sometimes you can be easily convinced or told that you're okay to bank in a place that is not in the state. And that is not correct. I'm dealing with a situation right now where investments were in banks that were not in Indiana. And please go to this website and make sure any bank that you're invested in, any bank that your transaction account is in, is on this. If by chance they're not, email me. I will get you the forms that the bank needs to fill out, or I'll have our director of Board for Depositories, which oversees the PDIF, get with that bank and get them on the list ASAP. That's the most important. Just make sure you're covered.
I think we have one more other question. I think it
Okay.
says, can you use your savings account? I'm guessing the money that's in the savings account to invest with Trust
The
Indiana.
only funds that would be questionable are borrowed funds. Sometimes a bank, if you borrow money from a bank, they're going to have their own stipulations. As I know you don't do huge bond issuances, but in the case of a bond issuance, they will say there's a bond indenture that comes with it that gives you the places that you can invest. And if it's not on that list, don't put it in. So if you were to need a fire truck and go through, I know it may be a fire territory or something like that would go together to lease a fire truck or to buy a fire truck. Sometimes while you're waiting for that fire truck to be ready, sometimes they're okay if you put it in Trust Indiana, sometimes not. So that is generally the only situation where funds cannot go in this.
I think that was the last question we had.
Okay. Well, you have my email. If you have specific questions, please email me. I'm happy to, if I don't have the answer, I will get somebody that does.
Thank you, Cindy.
Well, thank you. I appreciate all of you. Keep your chins up and keep doing the great work that you're doing.
Thank you.
Stop sharing now. There we go.
Oh, well, I think we're done. Drew, did you have anything else?
No, unless there's any other questions outside of this presentation, you're more than free to stay on here for the next 10 minutes, and me or Debbie can try to answer them for you. Debbie, if you got to go, I can stay on. And if you guys have any questions or follow up, obviously we have Cindy's email address. The Trust Indiana website, you can go on there and see their daily rates or what their historical rates are, because back when it first started, I looked at it doing it for years, and I seen her at conference, and I seen I think it was like 5.2 or 5 points, somewhere in the fives. And back then it was a point, I think I have it up right now. It was a point, like in the 0.6, like not even a full percentage. And it's like, well, that's
0.04.
not, yeah. So, and all the rates were bad at that time. So it wasn't like it was very advantageous for you to move your money up from somewhere else to there. But now it has even my wheels turning where it says, well, this is better than the CD rates. And we're so limited in the investments that we can do that. If you do have money that you're not using in your cash flow, or you have large cash balances, consider something like this, because it is so liquid, which CDs aren't, that you can make a little extra money. Are you going to make millions of dollars on this? No. But are you going to make $10,000, $20,000, $30,000 in 3 or 4 years? Yeah. And that could be put to good use. So I think it's an awesome advantage, and hopefully the rates stay the same, stay in the fives or the fours, that it's competitive, and just take the time to go look into it to see if there's opportunity for your township.
Very good. Well, if there's nothing else, you just want to hang, Drew?
Yeah,
Can
I'll
I say
hang
one
here.
more thing?
Yeah.
One more thing on the website. There is, if you scroll down, there is an investment calculator. And while the rates were a little bit higher, sometimes seeing numbers is what catches your eye. And it's an investment calculator. And what you can do is say, hey, if I put $10,000 in, you can go back and say, in July and, from July and August, how much would I have earned? And sometimes that number, when you compare it to your bank statement, will speak volumes. And that's helpful to know as well. Don't also be afraid to go to your local bank and say, hey, Trust Indiana is at this rate. Can you match it? You don't know unless you ask. And many times they will be willing to raise their rate. Even if they raise it a little bit, use it for whatever you need it to, so that you're making more money. Okay, I'll be quiet now.
Don't see any questions filling in, so we might just wrap it up here. And then if anybody has any questions for me and Debbie, obviously feel free to reach out to us at our ITA emails. anytime, and we'll try to get to you and help you out with whatever questions you guys will have. So
Yeah.
if that's it, Debbie, you got anything else?
All right. Nope. Thank you again, Cindy. Thanks, Drew.
Thank you.
Thanks, everybody. Have a great day.